Let me tell you about my friend Alex, someone who's always on the lookout for the next big thing in tech. A few years ago, he stumbled upon an app that promised something almost unbelievable, earning cryptocurrency right from your phone, without any of the usual hassle. He claimed he was mining cryptocurrency on his phone, no expensive hardware, no sky-high electricity bills, just a daily tap. It sounded almost too good to be true, especially when you consider how traditional crypto mining works. Usually, you need powerful computers, specialized equipment, and a lot of technical know-how. But here was Alex, just tapping his phone once a day, and watching his Pi coin balance slowly tick upward. Naturally, I was skeptical. Crypto mining on a phone? It sounded like a gimmick, maybe even a waste of time. I'd heard stories of people getting burned by get-rich-quick schemes, and I didn't want to be one of them. The idea that you could just press a button and earn digital currency seemed almost laughable. But Alex was persistent. He showed me the Pi Network app, its clean, simple interface, the big green button you tap once a day, and his growing Pi coin balance. There were no complicated settings, no technical jargon, just a straightforward way to participate. He explained how the app didn't actually use your phone's processing power to mine coins, but instead rewarded you for being an active member of the network. No battery drain, no overheating, just a simple routine. It didn't slow down his phone or eat up his data. In fact, it was so unobtrusive that he barely noticed it running in the background. For Alex, it became a daily habit, like checking his messages or scrolling through social media. He urged me to join, saying, "What's the harm? Maybe it'll be worth something." He talked about the potential of being an early adopter, of getting in on the ground floor of a new kind of digital currency. But I passed, thinking it was a waste of time, convinced that nothing would ever come of it. I figured if it was really that easy, everyone would be doing it. Fast forward to today, Alex has thousands of Pi coins in his digital wallet, earned with minimal effort. He didn't invest any money, just a few seconds each day. Now, he checks his balance with a sense of pride, knowing he's part of something that could potentially change the way we think about money and technology. He still doesn't know if they'll ever be valuable, but he's part of a global community all doing the same thing. People from all walks of life, in countries around the world, are tapping that same button, building a network that's bigger than any one person. It's not just about the coins. It's about being part of a movement, a social experiment that's testing the boundaries of what's possible with technology. Pi Network isn't about complex tech or big investments. It's about accessibility. Anyone with a smartphone can join, no matter where they live or how much money they have. It's designed to be inclusive, to give everyone a chance to participate in the future of digital currency. The experiment is simple. Can you build a cryptocurrency by distributing it to millions with almost zero barrier to entry? Instead of rewarding those with the most resources, Pi Network rewards those who show up, who invite friends, who help grow the community. It's a radical departure from the way most cryptocurrencies work. Looking back, I wonder if I missed out, not just financially, but on being part of a massive social experiment. It's not every day you get the chance to watch a new kind of economy take shape, right from your pocket. Maybe the real value isn't just in the coins, but in the connections and experiences along the way. Pi's premise is simple: reward participation, not computing power. It's about building trust, encouraging engagement, and seeing what happens when you lower the barriers to entry for everyone. The more people who join, the stronger the network becomes. It flips traditional crypto mining on its head. Instead of a race to the bottom for the fastest machines, it's a race to connect, to collaborate, and to see what's possible when everyone has a seat at the table. Instead of the fastest computers winning, it's about showing up every day. It's about consistency, community, and the belief that small actions, repeated over time, can add up to something big. And that's a story worth paying attention to. A reminder that sometimes, the biggest opportunities come from the simplest ideas, and that being part of something new can be its own reward. So, what exactly is mobile mining, and why has it become such a phenomenon in the world of digital currency? The term mining might conjure up images of powerful computers, whirring fans, and massive energy bills, but mobile mining is something entirely different. It's a new approach that's making cryptocurrency accessible to millions of people who never thought they could participate. Over 60 million users have joined the mobile mining movement, drawn by the promise of earning digital currency with nothing more than a smartphone. This global community spans continents, backgrounds, and ages, united by curiosity and the hope of being part of the next big thing in tech. Unlike Bitcoin's energy-hungry proof of work, which requires specialized hardware and consumes vast amounts of electricity, Pi Network's app doesn't actually mine coins in the traditional sense. There's no need for expensive equipment or technical know-how. Instead, the process is designed to be lightweight and user-friendly. There's no heavy computation, just a daily tap to prove you're a real, engaged human. This simple action is all it takes to participate, making it possible for anyone, anywhere, to join in. The app sends a gentle reminder each day encouraging users to stay active and connected. In reality, it's a distribution mechanism, not real mining. The app rewards users for their participation and engagement, distributing tokens in a way that's fair and accessible. It's about building a network, not solving complex math problems. The founders, a team of Stanford PhDs, set out to avoid the centralization and exclusivity that plagued early cryptocurrencies. Their vision was to create a digital currency that anyone could access regardless of technical skill or financial resources. Anyone with a smartphone can join, making Pi potentially the most widely distributed digital currency ever conceived. From students in bustling cities to farmers in remote villages, the barriers to entry are almost non-existent. The app's viral growth comes from users inviting friends to boost their mining rate, creating a powerful social network effect. Each new member strengthens the community, and the sense of belonging grows with every connection. Of course, critics argue this isn't real mining, it's just clever marketing and data collection. Some worry about privacy, while others question whether the tokens will ever have real value. The debate continues as the project evolves. Still, the simplicity and sense of community have driven massive adoption. For many, the appeal isn't just about potential profits, but about being part of a global experiment in digital trust and cooperation. For most, Pi is about being part of something big, not about technical innovation. It's a movement that brings people together, sparking conversations and connections that cross borders and cultures. The daily tap is a testament to the power of simplicity in building a global movement. In a world where technology can be overwhelming, sometimes all it takes is a single tap to feel connected to millions of others, united by a shared vision of the future. People always ask, when does Pi mining end? There's no set end date. Mining continues until 65 billion Pi coins are distributed. The mining rate drops as more users join, following a halving model based on user milestones. The more people, the slower the rewards. So, the real last chance is about getting in before the mining rate becomes negligible. Mining could continue for decades, but the days of easy rewards are fading fast. The project is shifting focus from mining to building real-world utility. Early participation is the most rewarding. After that, it's all about what you can actually do with your Pi. You've probably seen the wild claim, one Pi coin will be worth 314,159. Let's be clear, that's a meme, not reality. Pi isn't listed on major exchanges, so it has no official value. Any prices you see are speculative IOUs, not real trades. Some predict Pi could be worth a few dollars if the mainnet succeeds, but nobody knows. The real value will depend on demand and what you can actually do with Pi. Until then, treat the price hype as entertainment, not investment advice. Everything hinges on one event, the open mainnet launch. For years, the Pi community has been waiting, building anticipation and hope around this single milestone. The stakes couldn't be higher, as the future of the entire project rests on what happens next. Right now, Pi operates in a closed system. You can't trade it on public exchanges, and its value is mostly theoretical. Users can mine and transfer Pi within the app, but the outside world is still off-limits. This has created a sense of mystery and speculation, with millions wondering what will happen when the doors finally open. The open mainnet will finally let users move Pi out of the app and onto real markets. For the first time, holders will be able to trade, sell, or even use Pi in real-world transactions. This transition is what everyone's been waiting for, and it's the moment that will determine whether Pi becomes a true cryptocurrency or fades away. This is when Pi could gain real value, or crash spectacularly. The price could soar if demand is high, but it could also plummet if too many people rush to sell at once. Volatility is almost guaranteed, and the outcome is impossible to predict. With millions eager to sell, a price drop is almost certain. Early adopters may try to cash out quickly, flooding the market and driving prices down. The initial chaos could be intense, with fortunes made and lost in a matter of hours. The team may try to soften the blow with trading limits or gradual releases, but the risk is huge. Regulatory scrutiny will be intense, and any misstep could shake confidence in the project. The world will be watching every move. If the launch fails or is delayed, Pi could become worthless. Years of effort and hope could vanish overnight, leaving users with nothing but digital dust. The pressure to get it right is immense. Success depends on a smooth, secure transition and real-world adoption. The technology must work flawlessly, and people must actually want to use Pi for it to thrive. Partnerships, security, and trust will all play a role in determining the outcome. This is Pi's defining moment. Everything else is just build-up. The world is watching, and the next few days will decide whether Pi becomes a legend or just another forgotten experiment in the world of crypto. With 100 billion coins, how is Pi distributed? 65% goes to users as mining rewards, the heart of Pi's community focus. 20% is reserved for the core team, released gradually to keep them invested. 10% funds ecosystem development, grants, apps, and innovation. 5% is set aside for liquidity pools to stabilize the market at launch. This structure aims to balance community growth, team incentives, and future development. The vast majority is for users, but the team and ecosystem get significant stakes. It's a classic crypto tokenomics play. Success depends on execution, not just allocation. Pi Network is free, but your data is the real price. The app collects permissions and shows ads, monetizing your attention. To transfer Pi to mainnet, you must complete KYC, submitting sensitive ID documents. This raises privacy concerns. Your data is stored by a private company, a tempting target for hackers. Critics worry about potential misuse or sale of this massive identity database. There's no evidence of abuse, but the risk is real. Before joining, weigh the value of your privacy against the speculative promise of Pi. So, is Pi Network a revolution, or just hype? The upside, a shot at free digital currency, massive community, and a new model for crypto adoption. If Pi's ecosystem takes off, it could be a game changer, but the risks are bigger. Coins may never have value, the mainnet could flop, and your data is at stake. The project demands patience and trust, with no guarantees. Treat Pi as a high-risk experiment, not a sure bet. The real winners might be the creators, not the users. Know what you're signing up for before you tap that button. Should you join Pi Network, approach it with informed skepticism. Don't believe the hype or plan your retirement around Pi. If you're comfortable trading your data for a shot at a speculative asset, the risk is low. The time commitment is minimal, but privacy is the real cost. If you value your data, think twice before joining. Do your own research, read the white paper, and understand the risks. If you join, treat it as a curiosity, not an investment. Tap the button, forget about it and see what happens, but don't expect a windfall.